Hi, everybody. Thanks for listening today. This is Patrick Zielbauer from Infinity Futures. This presentation is entitled, What If You Could Make a Responsible Transition from Equities to Futures? Let's go ahead and do a disclaimer first. Trading futures, options on futures, and retail off-exchange foreign currency transactions involves substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not indicative of future results. All right, so just a little bit of background. Again, my name is Patrick. I've been with Infinity for going on 15 years now, since 2004. And our reality, being in the futures brokerage business, is that many of our clients come from an equity or equity option background. And what I mean by that is that very few people just call us up one day or send an email in and say, hey, Patrick, my name is Tom and I'm interested in trading crude oil futures. I've never traded anything in my entire life. That just does not happen all that often. Many of our clients trade individual equities, they trade indexes, they trade index options, all in the equity side before getting into futures. There is a natural transition that tends to occur from equities and options into futures. It is not instant and it is not for everybody. And there are a lot of reasons why people like to branch into futures, and some people find that it's for them and others don't. So what we're going to talk about today are a number of the reasons why people will make this transition and some things that you can do or at least be aware of to try to minimize the risk of making the transition and make it as effective and responsible as possible. So the general reason why people make the transition into futures from equities are listed here. Number one, futures are extraordinarily cost effective, very liquid, and very efficient instruments. And the majority of our business is done in the stock index futures, which are familiar to the average equity trader. So things like the E-mini S&P 500, the E-mini Dow futures, the NASDAQ futures, the Russell, and a couple of others. Secondly, futures have a much friendlier tax treatment, both in terms of tax rates as well as the simplicity of filing taxes. We'll go into some detail. And thirdly, there is just an overall simplicity that cannot be found in the options markets. And we'll go into that as well a little bit further. But what we're referring to are the fact that you can follow much fewer instruments and you can avoid things like theta decay and the rest of the Greeks altogether. So let's go ahead and get a little bit more specific about why people do make this transition. What if there was no pattern day trade rule and no 2 or 3 day settlement? So one very popular aspect of futures trading is that you do not need 25K in your account to day trade futures. There is no pattern day trade rule in the futures market. For those of you familiar with that, there is a limit to the number of day trades you can take in an equity trading account if your account is under 25,000. All right, that is a rule that does not apply to the futures market at all. If the brokerage company that you're trading with enforces such a rule in the futures market, that is their choice. That is not actually a regulatory rule. So it is true that if you have a futures account with Infinity, you certainly do not need $25,000 in the account to day trade. You can trade as often as you'd like, and once you close a position, the funds are immediately released for the next trade. In other words, there's no holding for 2 or 3 days. You can even initiate outbound transfers, for example, as a result of profitable trading the same day or the next day in some cases. So the turnaround is very quick. Just remember though, just like with day trading securities, day trading futures is indeed risky. Okay, moving on. What if you had a 23-hour trading day? It is a reality also that there are 23-hour trading days for most markets that our clients trade. We're going to include things like the E-mini indexes, like the S&P, NASDAQ, Russell, Dow, metals, currencies, energies, and interest rate products. Most of these markets open up at 5 p.m. Central Time, which is 6 Eastern, and then they trade all night long and all through the next day until 4 Central Time, which is 5 Eastern. So truly they are only closed for 1 hour between 4 and 5 Central or 5 and 6 Eastern Time. So let's say that you're concerned about the Asian or European sessions because you've got equity trades on, or you see something moving in the Asian session or when the London Open occurs and you want to lay off some risk or take a speculative position or hedge yourself. You can do that in real time after hours. You do not have to wait until 8:30 a.m. Central or 9:30 Eastern when the stock market opens to have access to a highly liquid market. Now, a couple things you want to remember. Number one, it is generally true that there is less liquidity in the evenings. That is not debatable. There is much more participation in regular hours. But the other thing to consider is I've seen some of the commercials too, just like everybody here has about trading ETF or index products outside of regular hours. I'm not sure if you've actually tried to do that yet or not, but you will generally find, at least based on what I have seen, to see far less liquidity, far, far less participation, much worse and wider spreads between the bid and the ask on equity products in the evening than you will in futures products in the evening. Futures products in the evening are very, very widely participated in because this is what institutions and individuals have been using for years and years to hedge their risk in the evening hours or off hours, or to trade in a speculative nature outside of regular trading hours in terms of the New York stock market. So you will have a 23-hour trading day in the vast majority of markets that you are trading. There are a few exceptions. Some of the agricultural products have shorter hours. There are some European markets that have different hours. But if you're trading the S&P 500, the Dow, the Russell, NASDAQ, or any of the popular commodity products like crude and gold and the currencies, you have access to those 23 hours a day. The next thing that I'd like to address is the simplicity of the trading day for futures traders. So let's start with each of these points here on the left. Most futures traders track roughly 2 to 10 markets. Some people only trade one or two products, maybe the S&P and the NASDAQ. Most people like to follow a handful of products. So maybe the S&P, NASDAQ, the Dow, and the Russell. There's the four major indexes. Maybe crude oil, gold, a couple of currencies, say the euro and the pound or the yen, and maybe an interest rate product like the 10-year note or 30-year bonds. That can represent the entire universe of what you follow throughout the day, every day. You do not have to sort through 10,000 stocks every day. You don't have to create scanners that are searching for very specific criteria that may never come to fruition. Or, worse yet, you use your scanner, you find a stock that has great potential. Let's say you're trading an energy company, and you're right on the money with your analysis of crude oil, but overnight the CEO has a heart attack or some kind of bad news specifically comes out about that company. You could be right on the money with your bet on crude and still lose. So why not make a pure price play on the price of crude oil rather than an equity or an index that is tracking crude? Thirdly, there's no margin interest even when you employ leverage. Futures contracts are inherently leveraged. There is no borrowing of anything from the broker. So therefore, there is never any interest paid or earned. So when you are taking a position that is worth more than what your account balance is, which is called leverage by definition, you never have to make an interest payment based on that. Now you want to be conscious of the fact that futures contracts are leveraged, and leverage is a double-edged sword, but you never have margin interest in the futures market at any time. Okay, fourthly, no expensive or complicated multi-leg strategies that are impossible to get filled. How many times have you been trading options on some equity like Netflix or some index, and you're trying to do this four-legged butterfly option spread or an iron condor or something like that, and you never get a fill? And it feels like you're putting the order in, and then right when you put the order in, you see the bid shift up like 1 penny, and it's like, wait a second, why is that happening? And there's 4 or 5 different exchanges. Maybe the broker is getting paid to send the order to a particular exchange versus another exchange. That sort of thing is very rare for someone who is actively trading futures contracts on a directional basis. The markets are very widely participated in. Everybody in the entire world who is trading the E-mini S&P futures is trading them on CME in a first in, first out basis globally. It is not a question of who got the bigger order, or is the broker sending the order to one place versus another, or internalizing it, or taking the other side, or something like that. That is not applicable to futures whatsoever. So for our clients who are typically actively trading futures products like the indexes, the currencies, the commodity products, interest rate products, they generally see very, very liquid markets and instant fills the vast, vast majority of the time. And finally, and this is something I touched on a moment ago, the broker is not compensated for routing the order to a particular exchange or internalizing the order. In other words, we are never, ever, ever the opposite side of the trade, and we do not receive anything for sending the order to a certain spot, because nobody does, because all the orders are done on a centralized exchange. In the case of the vast majority of the contracts we trade, the Chicago Mercantile Exchange. So there is no compensation for order flow and no internalizing of any order ever. Okay, so now let's talk a little bit about this misnomer that you have to be in front of the screen all the time in order to make use of the futures market. There's this common misconception that in order to trade futures, you have to be able to trade for 11 hours a day and you have to be able to trade on a 55 tick or a 1 minute chart. That is not correct at all. Futures are extraordinarily efficient instruments. This is something that I alluded to earlier on in the presentation. Let's do a comparison between the E-mini S&P and the SPY, and we're going to use the SPY trading as an example at a price of 280. So let's say that you buy 500 shares of SPY. Okay, 500 shares of SPY is roughly the same worth as one E-mini S&P futures contract. What do you need to do that? You need to put in 500 multiplied by $280, which is 140,000. Okay, now let's say that you only put 70 grand in the account to do that. Well, now you're paying margin interest on the other 70,000. And let's say that you get out of the trade within a day or a month or 6 months or anything less than a year, so you are getting standard short-term tax treatment. Okay, on the other side, with the E-mini S&P, you could take one E-mini S&P contract, which is worth roughly the same amount as 500 shares of SPY. You're going to post an overnight margin requirement where at the time of this slide was created was $6,600. There's no interest and you get preferable tax treatment. So futures are highly, highly efficient because you are not required to keep as much money in the account to take a very similar worth position. And of course, that does involve the use of leverage, but you are also not paying interest for that privilege. And you still have the ability to place stop losses and manage the trade 23 hours a day. All right, so let's have a little fun with this example of taxes. Now, again, keep in mind, I'm not a professional tax person. Make sure you consult a pro, okay? But what if the taxes were simple? Here are some of the things that make it simple, and then we'll go through an example. So firstly, there's no Schedule D. All right, so you don't have to fill out a Schedule D or have your CPA, charge you money to fill out a Schedule D to have it reported to the IRS as part of your taxes, number one. Number two, there's no matching up of trades or calculating cost basis. So let's say you've got hundreds or thousands of stock trades. You have to match them all up to prove cost basis. Maybe you transferred an account from one broker to another and they forgot to transfer the cost basis properly and you're doing it by hand. None of that applies. Okay, so you don't have to even worry about that. Number three, you receive a 1099 with your futures account with a net profit or loss on it. That's it. It's a one-page document. It's got one P&L number on it. Everything is included. You don't have to separate anything out. It is exactly what it needs to be for you to report your taxes properly. It's super, super simple. And best of all, you get 60-40 tax treatment on your gains. That means that if you make money, you get 60% of your income taxed at the long-term capital gains rate, even if all the trades were day trades. That makes a huge difference, or it can. So let's go through an example of how that is. So let's say that you're an SPY, you trade the Qs or the diamonds or the IWM, ETFs or stocks. All right, let's say you're a pattern day trader, so you need 25K in the account, although that doesn't really matter too much for tax purposes, but let's use that as an example because most day traders in the stock side obviously need that amount. Let's say you make 5 grand at the highest tax bracket. So you're going to pay short-term capital gains tax on that, which is about 37%. So 37% times 5,000 is $1,850 you can expect, give or take, for your tax bill. All right, now let's say that you're trading those same indexes, except you're trading them in the futures. So the ES, which is the S&P, the NQ for the NASDAQ, the Dow is the YM, RTY is the Russell. Number one, you don't need 25 grand in the account, although obviously you can have as much money as you want in the account. Let's say you made the same amount, $5,000 at the highest tax bracket, with that 60-40 tax treatment applied. Okay, you can follow along with my math at your convenience. There's an example here you can link to as well. Your tax bill ends up being $1,340 or a blended rate of about 27%. So about 10% cheaper depending on where you're at in the tax bracket. So if you are trading a significant amount of capital or you have seen success with your trading or you think you can see success with your trading, this can ultimately make a significant difference. So we've now covered some of the basics as far as why people make the transition from equities into futures. The next sort of leading question is, why employ Infinity? Why deal with us? And that's what I would like to talk about next. So it is our opinion that futures require specialization. And let's talk about these 3 points very briefly. All right, number one, for all the great things about futures, the fact is they are more levered than equities and options. So if you are trading with higher leverage, you are inherently increasing your risk. And that's something that every trader should be aware of. Secondly, we believe, as a result, that considering the risks, we believe that traders should trade with a firm who does not treat futures like a side project. All right, now that is kind of a weird phrase to use, but our experience with our clients, based on what they tell us and the feedback that we get about some of the other firms out there, some of these giant firms that really specialize in options or in equities, they have some great things related to that style of trading. But a lot of times they fall short on the future side of things. It might be because of the rates, the commission rates. It might be because the margin requirements are way too high or they're changing all the time. It might be because the platform can't hang in a fast market. Every time there's a lot of pressure or a lot of stress because the market's moving very quickly, the program can't react. If you are trading an option spread and you're getting out of that spread in a week, that doesn't really matter as much, you could argue. If you are trading futures, it can matter a lot. If you're trading things like the NASDAQ futures, like crude oil, like gold, like the S&P, those things can be very, very important to you as an intraday trader, especially. So we believe that you're going to have a better experience overall if you work with our platform and our personalized service. And that's the third point. We believe that it can offer immeasurable benefit. Some of these things can fit very neatly into an email or a spreadsheet, and others simply cannot. Okay, all this being said, I'd like to go a little bit briefly into detail about the platform and the charting that we offer here at Infinity. So if you have questions about the specifics, we're going to show you some charts, some images, and obviously we would love to take your questions. But let's start with the DOM. Okay, DOM stands for depth of market, DOM. We offer what's called Infinity AT Level 2 DOM. And this is the platform that represents the vast, vast majority of our clients' trading. What I mean by that is that when someone comes to Infinity to trade with us, or they're coming to us because they saw someone using our DOM in a video, or their buddies told them about it, most of the time when people come to Infinity, they're coming here for our trade execution and our DOM. Some great things about the Infinity AT DOM. Number one, it uses less memory than one tab of Google Chrome. I'm not kidding. This program is super, super lightweight. It does not put a lot of pressure on the computer in terms of system resources. It can fit basically on any screen and can run right alongside any other broker's charting program. So if you're coming to us from another company and you've been using their charting for 10 years and you just don't really want to use our charts, but you really just want better execution, fine. You could just use our trading DOM. You do not have to use our charting if you don't want to. Our DOM is super easy to operate. It's super easy to learn. It's not filled with useless gadgetry that you're never going to use and that weighs the program down. And it doesn't have any fixed cost. It does not have a straight platform fee. So if you just want a nice lightweight execution platform to run alongside your other company's charting or something, totally fine. If that's how we're going to fit into your world, we are totally okay with that. Secondly, we do offer Sierra Charts, which is optional. We provide the charting. It is free if you do 10 round trips every 30 days. Otherwise, it's 20 bucks. Actually, it's $19.95 every 30 days. So most people don't pay for the charting because 10 round turn trades for even a relatively modest day trader is not a very high threshold to meet. It is very, very efficient. Again, super, super lightweight, has hundreds of customizable and combinable studies. It is powered by our super fast data feed. It contains a full suite of profile and order flow studies for those of you who are interested in that. You do not need to buy expensive add-ons to use those sorts of tools with our program. You can trade in an automated fashion or create signals based on custom conditions that you've created. And again, it's optional. So if you don't want it, or you don't need it, or you don't have the bandwidth in your life right now to learn it, you can opt out of it altogether. Okay, moving on. What if you had personalized service? Your Series 3 licensed Infinity rep will do the following. Number one, remotely assist you in helping you set up the program and craft and organize your charts. If you've got charts that you built in some other broker's software and you want to see if we can make something similar, just send us an image or two of your main screen and we will work on something on our side and actually send you through our network a file that you can use on your own computer. You can work backwards off it, tear it apart, change it. And if you have issues, we can always remotely connect to the screen and actually take a look, through our remote support capability. So that's something we can do. We will talk with you about your personal risk tolerance and evaluate your trading plan in conjunction with current market volatility. Meaning we will actually have a conversation with you about what you're going to trade, what you should or shouldn't trade based on what we feel your risk tolerance is. And if you have a game plan that you've written, hopefully you do, something on your desk that you can take a picture of, or a Microsoft Word document that explains what you're going to be doing, send it to us. It's good to have an accountability partner in this business. And this brokerage business has gotten really, really faceless. Normally, you're not going to find this kind of service anywhere else anymore. All right, this is something we are willing to do if we are given the opportunity by a customer who wants to trade with us. In light of that, we can suggest markets that might be best for your risk tolerance, capital structure, and experience. For example, if you are brand new to futures, you've never traded a futures contract before in your life, and you call me up and say, hey, Patrick, I'm really interested in trading heating oil. Right? That's probably not the best place to begin. It's super thin, very, very risky. It's not a great place for a brand new trader to start. So these are things that we can discuss with you. If we know that you have a capital structure that can support very volatile markets or big moves or lots of contracts, we might suggest different strategies or different markets to trade based on that. If we know that you're going to start off with a relatively modest balance and you have a very low tolerance for risk relative to maybe some of our other clients, we might suggest other markets, maybe smaller contracts or other things that you can look at to fit into your world once again. That's the general theme. We can explain common pitfalls and how to best avoid them, things like overtrading and overleveraging and how those sort of buzzwords actually manifest themselves in light of the trading day and in real time. And at your request, we can review your trading activity. So if you want to say, hey, Patrick, can you take a look at how I did yesterday? What do you see? What can you gauge where I was at mentally when I was taking these trades? Can you look at this price on the chart? What do you think I should have done differently? And of course, we have the benefit of hindsight when we do something like that. But again, this comes back to accountability. If you feel like you've got someone who will help you hold yourself accountable for your trading activity, it might change the framework with which you operate. And in my opinion, it's something that is largely lost in our business. And we believe that if customers had a little bit more of an opportunity to engage a professional, they might have a better chance to make it. So let's summarize this a little bit here. The self-directed trading revolution. Infinity Futures is indeed a huge proponent of the ideas that have been championed by major online stockbrokers over the last several years. We just believe that futures are unique, and they need to be explored carefully, and they need to be explored with personalized support that, in our opinion, cannot be found with these traditional 800 number firms or educational services that are actually not allowed to provide personalized or tailored advice. They are not registered to do so. All right, we believe that a trader who has discussed risk with their Infinity representative, formulated a plan, shared that plan with his or her representative, and understands the importance of utilizing Infinity's innovative and customizable risk system has a better chance of protecting themselves from avoidable mistakes that can alter the course of the entire account. That is a great way to summarize the interaction that we believe is valuable between our clients and their broker at Infinity. So, in summary, see how Infinity Futures can help you make a responsible transition from equities to futures. We thank you very much for listening to the presentation. We appreciate the interest. My direct contact information is listed here. Again, my name is Patrick Zielbauer. My email address is pz, just my initials, at infinityfutures.com. You can find my direct phone number there, 312-373-6228, and my Skype ID. We certainly appreciate the interest. Thank you so much for listening. And if you are interested in learning more about Infinity Futures or futures in general, please do not hesitate to contact me. Thank you again. Trading futures, options on futures, and retail off-exchange foreign currency transactions involves substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not indicative of future results.